Hi everyone, welcome to today's special educational webinar. My name is Gavin Holmes. I'm the author of Trading in the Shadow of the Smart Money, and I'm also the CEO of Trade Guider Systems International, and I'm very pleased to be with you. Today's seminar is all about the reasons some traders make it in the markets and some do not. And I've decided to put this webinar on based on an email that I received from a customer a few weeks ago who'd really lost a lot of money in the markets in the previous 5 years that he'd been trading, and found volume spread analysis, which is something that we teach. And in talking to him about why he was losing money, I got really in depth with this particular gentleman as to why it was happening. And I already know why people lose money in the markets. There's a lots of reasons. I'm going to share with you today those reasons. But there are a group of traders that continually are successful, and they seem to have this attitude, which is something that's very important when you're trading. Trading is a bit like a giant competition, the biggest competition in the world. I just watched yesterday the football here, and you know, it's very, very interesting when there's a competition taking place. You know, there's a prize at the end of it, and guess what? Everyone's fighting for that prize. In the financial markets, it's money. So we're going to talk about today the reasons that people lose money and the reasons that some people make it in the market. So we'll start with losing traders do not have a trading plan. So let me start off by asking the audience, there's many of you, hundreds of you here, how many of you here, be honest, yes or no, if you're trading, have a trading plan written down? Be honest, yes or no. How many of you have a written trading plan? And by the way, I'm going to share with you my trading plan today to try to help you, but because it's important. And look, there's a lot of people saying no here, a lot. Few people saying in the process of starting it. Okay, Gar, I know you've got one, definitely, good. Okay, I'd say, looking at this audience, that that's 50-50. 50% have said yes, I've got a written trading plan, and the other 50% have said no, I don't have a trading plan. I believe it's one of the most important things to have, and I wrote this one several years ago. I've changed it and adapted it. I'm not going to share all of this with you because, well, I'm going to share the whole plan with you, but in this seminar I'm just going to take you to the most salient points. And of course, most important about anything you do in life is to have some sort of plan behind it. You know, I own several businesses, and each of them has a business plan. We don't just rush out and do something because we think we feel like it when we wake up in the morning. We have a plan. And I have a business partner called Richard, and we spend a lot of time on planning the company, what we're going to do in the future, what we need to do short term, medium term, long term. Now, this is also, although it's a trading plan, it's sort of turned into, as I was writing it, a life plan, really, I suppose is the way I look at it. I'll start off on something you should all think about before you write your trading plan. Okay, think about a mission statement, right? Something that's positive, something that you personally want to achieve, and remember, positive actions get positive results. Negative actions get negative results. Negativity can be described as anger, frustration, fear. I could list a whole load of words like that. Positivity says I can, the word yes, I will. And when you start your day, it's very, very, very important, especially as a trader, to start in a positive frame of mind. I cannot stress how important a positive attitude is to being successful in the markets. I know it's talked about by many. It sort of borders on the psychology of trading, which I don't want to get into here, but I can absolutely say 100% that with a trading plan, I read my plan every week, and I try to make sure I look back at things and say, right, am I being true to my plan? So I initially put here, I read a book years ago now called The Purpose-Driven Life. I forget who the author was, but someone will tell me. But it was a brilliant book, actually, and it does really make you think sometimes, what is your purpose? So I've put here My purpose is to empower my fellow traders and investors with the knowledge, belief and confidence instilled in me by the master Tom Williams. I want all who connect with me to be consistently profitable in the markets, be happy, and to help others know the truth about the markets, the herd, and the smart money. And then I'll put a little statement there, which is very true. It's Rick Warren. Thank you, Mark. That's exactly who it is. It's quite a few years. I read quite a few years ago. I read the book, but it is indeed Rick Warren. You get paid to wait. Be patient. I'll repeat that because it's a very, very important statement as a trader and investor. You get paid to wait. Be patient. Now, we've developed a system here at Trade Guide called Scan, Confirm, Trade. Scan, confirm, trade. And it's actually a system that's very straightforward. And as part of that, I have a checklist before I take an entry in the market. Here is a checklist for going long and a checklist for going short. Now, that checklist is part of my trading plan. Again, I will share this with you. I have no problems with that. These are some of the rules that I follow. I'm a rule-based trader. Means that I wait for things to happen based on volume, setting up on the chart, and then I take the trade. Not the other way around. I don't sit here and get bored and go, oh, I'll take a trade because I'm bored. I have a trading plan that I follow. Now, I then wrote a mission statement, and that's very important too, because it is something that sets the scene every day for what I try to do. It says here, I'm very grateful for everything I have today and gratefully expect more to come, which it does seem to do. I will share the information imparted to me by Tom Williams. And by the way, if you don't know who Tom Williams is, you will find out more as we go through the presentation. He is the inventor of the method that we teach at Trade Guide, volume spread analysis. He's now 88 and he lives in Worthing in the south of England. And he still trades. I spend a lot of time with him. And I'm very blessed to have met him, very lucky person to have encountered Tom in my life. He's almost become like a father figure. I lost my father in 2001 to cancer, unfortunately, and that's actually when I met Tom, and he sort of filled the void for me, which was very nice. But he shared with me knowledge that I now want to share with everyone else because it's powerful knowledge, although I will say it can be seen as being contrarian. So I will share the information imparted to me by Tom Williams with my fellow brothers and sisters, and I mean that universally, because we are in fact all brothers and sisters who seek me or connect with me. I will make money in the markets and assist others to do the same. Remember, I'm trying to make positive statements at all times, because the more you think positively, the more positive the results you get. That is a fact. I will excel at trading and will become a hedge fund manager in 2 years. When I wrote this a few years ago, I'm now a fund manager and we're just about to launch a major fund. So again, be careful what you wish for. There it is. I will act with integrity, honesty and fairness in all my dealings with others. I will achieve my monthly and yearly financial goals and will always control my own destiny. And I'm very lucky to be in a position to doing that right now from here, broadcasting to thousands of people sometimes all over the world. I will travel the world and teach what I know to others so they too can become financially independent. And of course, many of you will know if you've been in Australia or Singapore or Malaysia, Hong Kong, I've been to all those countries teaching what I know. And that's really, very, very fortunate thing for me to do. And the word of Wyckoff and VSA, which is what we teach, is spreading. And then I have here, I will connect with other like-minded people who have the same desires and aspirations that I have. Well, it was only three years ago that I encountered Grigory Margolin, our Chief Technology Officer, who is now our head programmer, who's actually moved just down the road from where I live here in Lymington in the New Forest National Park. He has exactly the same aspirations and desires that I have, pretty much so. We want to help people. We both want to be successful, but we both love trading and we love the markets, but we know that the markets are dangerous and we know that there are people out there that don't make it in the market. And it's very important that whatever we do as a company, it's trying to help you to understand how the markets really work. My mission to live a purposeful, meaningful and enjoyable life and enjoy all I have and graciously seek more of what I want, to love my friends and family and be a good husband, father, brother, son, boss, friend and teacher, to understand that the universe is abundant and to know that every single person on this earth is important and should be treated as such. To understand and master the universal laws and always connect with the higher power and know that I can empower myself and others to have a great life. Always remember, however, this is something from a very famous film. You'll all remember it. Bulls make money, bears make money, pigs get slaughtered. Very, very important. Now, I'm going to be talking about the Alibaba principle because this is how the markets have to work. Most of you will have heard of the story, I believe, of Alibaba and the 40 Thieves. And it's very relevant to the markets. And why is it relevant? Well, if you remember the story, Alibaba had found a cave where he would say, open sesame, and he opened the cave. And to keep this short, there was a lot of gold and silver and diamonds and coins. But Alibaba was very wise. He was very clever. And he thought, if I rush into that cave and take out literally, horse loads of gold and silver, it will attract the attention of the thieves or the negative people who will say, hey, I want that, and I might get into trouble. So instead, what I'm going to do is take one piece of gold out each day, and over a period of time, no one will notice as I accumulate this wealth. And that's exactly what he did. Well, after a year, of course, he managed to buy himself a new horse and cart and a new house and whatever they had in those days. But his cousin Kasim had seen this, but was like, I said, where are you getting your money from? He said, well, if I tell you, you've got to promise me faithfully that you follow the same rules as I do. And that is each day, I'll take you to the cave, I'll show you where the gold is, you take one piece of gold each day. Well, no, he shows Kasim the cave, and the next morning Kasim turns up with donkeys and a big cart and loads the cart up with the gold, thinking, oh, I'm rich, I'm a millionaire, it's wonderful. Keep in mind, by the way, the analogy here is the cave is like the market. He loads it up, goes down the hill, and of course with all the clanking of the gold, the thieves that are up in the mountain hear it, and they come down and they kill him, they stab him, they take all the gold. Now, the moral of the story is, to relate it to the markets, is the markets will give you a living, that you can make money in the financial markets. We've got customers, if you go to the front page of tradeguider.com, our website, I will show you 2 articles that were written by 2 of our very successful customers. There are many others, but I do know a lot of the people I've met who've lost money in the markets have gone in with no risk-reward profile at all, no trading plan, and they've really believed the rubbish sometimes that snake oil people sell, saying, buy this, buy that, come and get trained here and you will be a millionaire in 2 weeks or 3 weeks. And I've heard people say that. I mean, there was one article I read here in the newspaper from an educator that's promising that everyone's going to be earning hundreds of thousands of pounds from the financial markets within 1 month. And I'm thinking, come on, please, wake up, all right? Wake up, all right? As Richard Ney said, the market is devious, and many times you will buy on good news only to lose money and sell on bad news only to see the price rise soon afterwards. And that's because smart money understand crowd behavior, and they take full advantage of what Tom writes about in his book, which is called Master the Markets, the herd or the group. The group will act in a specific way when certain information is provided. You see it all the time. Just look at what's happened with the Brexit and the fear that's been created. But again, there's reasons that's been done to put the group in fear, and that has happened very successfully. The media have done their job, and yet actually no one has talked about the massive opportunities that are coming from this negative news. Whenever there's negative news or anything bad happens, there's always something good that will come out of it. That I can go through history, and you go back in time and look at something really negative like wars and things that happen, and then look at the positives that come out of it maybe years afterwards. That seems to be a universal law. Now, I'm not going to go through all of this, but because there's no point, I'm going to share it with you. I'll let you know where you can get this at the end. Now, I will say that one of the things that I have in this trading plan is the markets that I personally specialize in, the stocks that I specialize in, okay, which are here, the time frames that I specialize in as well, which is quite important, okay. And again, when we look at time frames, they're different for each particular strategy that I follow. And then once I've adopted the strategy, I use my checklist, and the checklist is very straightforward. It's looking for unusually high volume in a particular area of the price chart. And if you don't know what volume is, don't worry. You're going to learn this as we go through, because I'm going to get to some charts towards the end, so you can see it. But you know, I talk about here in my first thing, my favorite principle to buy into any market is called bag holding. And bag holding is a very simple principle. The news is always going to be very negative when this signal appears, or this indicator. I don't like to use the word signal. It's an indicator, as we call them in Trade Guider. When it appears, you will see very, very clearly on your chart a downtrend in place, okay, a downward move. As the indicator appears, the volume, which is what you see on the bottom of your charts, if you've got decent charting software, will be very, very large. I call it enormous. I use the affectionate word Yao Ming volume, because Yao Ming was a very tall basketball player when he was playing in the NBA, 7'6", and if he stood next to me and I'm 6'2", he was much higher than I was, or much taller than I was. So that's what I look for, massive, unusual volume. What is volume? It's the footprint of professional money. And bag holding is a very, very important signal, because the news is so bad, everyone starts to sell, and at least the group do, but very smart players who see the value in the underlying instrument come in and buy. And I'm going to show you an example in a stock that we actually sent an alert out in January of this year for that very same signal in the Trading the Market service. And in fact, if you go to the, I can actually show you it right now. If you come up here and we scroll down, Southwestern Energy was one of them, okay, SWN, which we'll have a look at, okay, and we also had one in Disney, but SWN was the stock that had the bag holding signal. And if I just access, this is our Trading the Markets alert service. Let me just, sign of weakness, there should be sign of strength, beg your pardon, I'll have to change that, but it's bag holding. That's what it looks like here, guys and girls. It's a massive volume down bar. You can see here, it's narrow spread, so narrow range. This was the month that they said that oil could go to $10 a barrel. The news is negative, it's bad. Massive volume, we can see here, and that was filmed in late January, 8:53, and we'll have another look at a chart towards the end, but that is what bag holding looks like. It's a sign of strength. So, do traders need a trading plan? In my opinion, yes. It's vital to your success. And if you haven't got one, I will share my trading plan with you so you can actually have a look at it. And then you can follow. Some customers have told me that they've adopted much of the trading plan that I have and have seen great success in their trading. So again, if you want to get a copy of that plan, just email tradeguider@outlook.com. Simple as that. Just tradeguider@outlook.com. That's one of my personal accounts, and I will send it to you. So losing traders do different things on different days and are totally inconsistent. Now, what causes inconsistency? It's lack of a trading plan, or indeed doubting your trading plan. And what happens is you make losses. Now, the wonderful thing about volume spread analysis, and Tom, when he was teaching me right at the beginning, said, Gav, he said, it's amazing that all the indicators that you see in the VSA system are there in hindsight, of course, but they appeared when the bar closed. So they must have been there in foresight, not hindsight. And it's true. And once you can interpret where the professionals are placing their trades, which is what Wyckoff said many years ago. And for those of you, again, listening to this, possibly for the first time, we adapted on the work of a trader called Richard D. Wyckoff from the early 1900s. And he was a very famous trader in his day. His surname is spelled W-Y-C-K-O-F-F, Richard D. Wyckoff. And what Wyckoff taught us all those years ago is that the markets were being manipulated. And he studied some of the great traders of his day and investors, J.P. Morgan, Otto Kahn, amongst others. And he realized that actually, when they were telling the market that they were buying something, they were starting to sell it. And when they were indicating to the market that they were busily selling something, they were actually accumulating or buying it. And that goes on today. It will go on in 100 years' time. It doesn't make any difference. There has to be losers in a financial market to make it work. If everyone made money, there wouldn't be a market. So it is a competition. However, it's one of the most exciting things to do is to watch a market as it's trading and then physically be in the market and know that you've made a decision that's moving in your favor. But what a lot of educators don't teach is risk management, how to manage your capital. They don't teach where to put stops. They don't teach you, how much percentage-wise you should put into any one trade, and if it goes against you, when you should get out. In the trading plan that I'm sharing, you're going to see there is a plan there for percentages loss-wise and percentages profit-wise. Just be clear. It doesn't matter what system you use. You will have losing trades. I've not met any trader yet who has told me I've never had a losing trade, because that would not be true. Traders do know, especially professional traders like myself, understand that when they take a trade, there is risk involved. And as long as you understand that risk before you get involved with trading, you'll be fine. And never trade with money that you couldn't afford to lose. Losing traders don't have any belief in their chosen strategy. Belief in what you do is key to your financial reward. Computers do not think. They compute the imputed information and need no financial reward, which is why we at TradeGuider have computed the volume spread analysis methodology that originally came from Wyckoff. And it's all about reading the tape. It's about tape reading. And what tape reading means is reading, I'll simplify it for you. Volume is activity. That's all you need to worry about. Volume is activity. And it's the activity of what's called the composite operator, or the group of professional traders. It's their opinion about what the market's doing. At any particular time, Wyckoff said, the market moves second by second and moment by moment, and anyone that can read the tape has a great advantage over the general trading public. And that's exactly what we teach. We teach our customers how to tape read, how to understand and interpret volume. And once you have got this information, as Tom always says, it's with you for the rest of your life, and it's extremely rewarding. The losing traders, they think and they act like gamblers. If a card counter goes to Vegas and puts odds in their favor, that's why they're banned, because if they discover that the card counter understands the game that they're playing, then guess what? They're banned from the casinos. So as a retail trader, you can put odds in your favor, but you must put in the work. And again, trading is a game of the odds. Not like gambling. It's different. I was interviewed on a radio station several weeks ago now, and the interviewer, as I was explaining about trading in the financial markets, and I suppose you could use the word speculating, which is what you're doing. She said, so you're gambling then? And I said, no, I'm not gambling. I said, it's very different from going into a casino where the odds are already stacked in your favor, or indeed you put money on a horse, and once that horse has run and has gone, you're not going to get your money back until either you win or you lose. You can't manage that horse. But when you're in a trade, you can actually manage your risk, you can manage your reward, you can cut the trade if it's going against you, so you don't lose more than a percentage of your account. In my case, 2% is the most I'm prepared to lose. But studying the markets is an art form, and it's not a game. If you're coming into this to make a quick buck, and you're watching this, I'll probably put this on YouTube, you're watching this and saying, I think trading is going to be really easy, and I've heard that you can make triple-digit numbers in a month. That's not true. The truth is, trading and investing is a challenge. Yes, it can be done. Yes, there are people out there that make hundreds of millions of pounds doing it. Now, we know who those are. We know Warren Buffett. We know George Soros. But there are many others that do. They're human beings, okay? They don't have some special gift. They just happen to understand the markets and what the markets do. And they all started from scratch, learning what the market did as they went through. So it's not fair to say, you can't make it in the market. If you're prepared to put in a little bit of effort and you're prepared to be contrarian, that's one of the most important things, then anyone can make it, but they have to put the effort in. Losing traders are always searching for the holy grail. I've heard this all the time. Now, it doesn't exist. Well, that's interesting because we are working on, and I don't use the word holy grail anymore. I use the simple fact that volume, when you understand it, gives you a footprint. Now, human beings then need to interpret that footprint, but computers are much better at being non-emotional about the information they're seeing. And we're very fortunate at Trade Guide to have a very clever CTO in Grigory Margolin, our Chief Technology Officer, who is developing a trading system that sniffs out the trades, and we're going to call it the sniffer, and then identifies the optimal entry. So it actually gives you the entry. Now, we're doing it already in the live trading room. We've got email alerts that come out and say, here is an entry based on a principle. But we are moving forward with an automated system that takes out the emotion, because one of the biggest trouble traders have is managing their emotions once they're in a trade. Because I'm sorry, anyone that tells me I don't have any emotion when I'm in the market, Gavin, I don't believe them. There's always some emotion involved in trading. Now, for me, I've managed my emotions because I've been trained to do that. I used to be a police officer. Many of you will know that. And in the police, you're taught to do a lot of things. But one of the things you have to be in under fire, so to speak, if you're in a riot situation or there's a big fight going on, and I was in several, you have to think clearly. And I often use that training when I'm in the markets because I understand that it feels the same sometimes. You're managing a position that's going against you. You can get angry, you can get frustrated, you can go mad, but that is not going to help you, as I found out. And don't think for 1 minute that when I started all this, I was good initially. It took a bit of time. But then I realized that positive thinking, being positive about the approach to the market, having the trading plan and understanding fully the volume spread analysis principles made all the difference, and it really did. You often get one of the things that we often see is claims of percentages of particular systems. Now, fortunately, we have a trading room that have been running now for several months with two of our students, Abraham and Darren. Most of you who've been in the room will know that. And they have actually produced a plan and a percentage of accuracy of the room based on the VSA principles. And very shortly, we're going to produce that and show you that so you can see it can be done. But we're never going to make the claim that if you were to buy the Trade Guider software, you would suddenly be 100% up in a week, because we can't make that claim. Okay, and it would be a lie. So remember, if you see any marketing material with a claim that you as an individual can make 200% in a month using this system, you're being groomed for a con. So just be aware of that. And there's plenty of companies out there that do it, because there's a lot of people out there who will buy that for, sometimes I saw one product up there for $10,000. $10,000. And you see eventually you go onto some of these chat rooms and you see that people have been ripped off. Just be aware of that. Losing traders often use just too many systems and too many indicators, so they never know what the chart is really telling them. The chart never lies if you know how to read it correctly, which again is what we teach. We are teaching our customers to read a chart, and the information that's in that chart is the truth. You've got to be very careful in the markets with the lies that come out. So we have a website which I highly recommend you go and take a look at when we finish. The website is marketmanipulation.com, and on it we've put a compilation of stories from all over the world, not just from the UK or the USA or Canada or Australia. It's everywhere. And we've put that information on the site so you make up your own mind. Because if you understand that at times markets can be rigged, we've heard about the LIBOR, haven't we? That's a big story that's even now still in the news because 3 traders, I believe, were put in prison for rigging the LIBOR. But what they don't tell you is when a market's being rigged, there's massive activity that comes in on the chart, and that can be seen in the volume. And when you see that volume, you will understand that that's activity of professional money taking advantage often of news. The news and the media is used by professional money. And if you go to this website, marketmanipulation.com, there's a very good video on there of a great trader called Jim Cramer, who I actually used to follow when I was in the States. I lived in Chicago for 14 years, and I used to watch his program. It's quite funny, actually. But there's a very serious video on there where he talks about how the markets and stocks particularly can be rigged, basically by putting out false rumors and false information so the stock falls in price. And as it falls, the professional money see a price that they're happy with and buy it back at the lower price. Because actually, the trading arena is very straightforward. You have to buy low and sell it high. You can't buy it low and sell it lower. You won't make a profit. But you'd be absolutely staggered how many people don't realize that. And it's so logical. Losing traders are often undercapitalized. They take large trades with very poor risk-reward ratio and no money management skills at all. Winning traders are traders with discipline. They have belief, lack of fear, and knowledge of how the markets work, and that's very important. They have knowledge of how the markets work. They also know they can never be 100% right, and they get out of losing positions quickly and see it as a small business loss, not a financial disaster. How do you treat losses? Everyone's different. I have traded, my public account live for many, many years. I've been in live trading competitions all over the world, and I've had losses and I've made money. But the one thing I don't do, if I have a losing trade, I explain to myself why I've closed it, where my stop was. If my stop gets hit, fine. That's why I've got to stop there. Treating a loss as an educational situation rather than getting angry and frustrated is far better than actually losing your temper with the market. You will never win if you consistently get angry because you've made losing trades, which is actually why you should have a trading plan. And one of the things that I did when I started my trading plan was I took screenshots using a product called Snagit of each trade as I took it. And the winning trades, I began to see consistently why they were winning, and the losing trades was basically based on one thing that I could see I was where I'd made not a mistake, it wasn't an error, my timing was wrong. The principle was there, my timing was wrong, and I could identify that very, very clearly, very easily by taking screenshots of the charts and then noting down why I had been successful in certain trades and why other trades hadn't worked out. And it takes discipline to do that. It takes discipline to write a trading plan. But I have to say, if you want to make it in the market, you'll need to teach yourself the discipline. And it can be done, because I was, I'm not the most disciplined person. I had to force myself to do it. And the trading plan made a big difference. Losing traders do not understand how the markets actually work, often believing that price moves the market. It's nothing to do with that. The forces of supply and demand and the trading of smart money causes prices to move. There is a universal law. There are thousands of universal laws, but one of them is called cause and effect, effort versus result. Both of those things are what move the price. Cause and effect and effort versus result. Now, we could spend half an hour to an hour just on effort versus result. And very simply, the effort is seen in the volume. That's what the effort is. The result is seen in the closing price in the time frame that you're looking at. And that's how the market works. Again, I've put here, if you look at youtube.com and just type in market manipulation, you'll see a lot of very interesting videos from traders all over the world who've discovered that actually the markets are moved and it's nothing to do with price. Losing traders get confused by slick sales and marketing of trading systems that claim to have this accuracy, so end up trying many systems that almost always result in losses. Okay, you'll have heard people say our system is 80% accurate, 90% accurate, whatever. Okay, it's not. Okay, it's not as simple as that at all. And I can assure you, you're being groomed for a con if you see that. So, losing traders always follow the herd. And this is the herd Tom talks about in his book, Master the Markets and the Undeclared Secrets that Drive the Stock Market. It's how the group act under certain conditions. And whether we like it or not, human beings, if you put them in a theatre and a guy comes out the front and says fire and you can smell smoke, they're going to go for the exits. Okay, and the group act in a certain way, and they do in the markets all the time. I'll give you an example. A few years ago, we were told that gold was a safe haven when it was trading up near $2,000. And many investors went out and bought gold. What happened to gold is it dropped to $1,200. It's in a slight recovery at the moment, but nevertheless, overall, it's in a downtrend. And at the time that everybody was buying gold, it was the time when the smart money was selling. So you don't want to be a group member. And you could actually see on your chart in August and September of 2011 how they were selling gold. It's a very obvious chart when you go and look at it. So when you read price and how to read the chart, you will understand the truth is in there. The truth is in the chart. And again, one of my favorite sayings is your mind is like a parachute. It's best used when you open it. So, no one knows everything about the markets. There's still things I'm learning. I learn about the markets every week. I have customers emailing me stories and things about high frequency trading and all of these things. The market will always do the same thing because it's been doing it for hundreds of years. I mean, remember, the tulip market is where it all started all those years ago. And that's how we're now in a very sophisticated era for human beings where we've got computers that can produce massive calculations in a split second. Nevertheless, again, when large orders go through the exchanges, and even in Forex, you can see unusual volume. And we'll show you that. It's all about discipline. Fortunately, as Warren Buffett said, you don't have to be a genius to be a successful investor. As Berkshire Hathaway chief investor extraordinaire Warren Buffett said in a 1999 interview with Business Week, success in investing doesn't correlate with IQ once you've got above the level of 25. Once you have ordinary intelligence, what you need is the temperament to control the urges that get other people into trouble in investing. It's true that not everyone is gifted with Buffett's calm, cool demeanor, but challenging yourself to avoid your own worst instincts will help you reach your financial goals. Very, very true. I know this one sounds obvious, but it is true. Keep your winners longer and dump your losers sooner. That's a simple rule. Again, it's in the trading plan. A lot of traders, when they're in a losing trade, convince themselves that they're still right and it's going to turn any moment. And then they watch it go down another leg. And then they go, eventually they capitulate or their account is wiped out. It happens a lot. Investors in Odeon and Barber's study were much more likely to sell winners than losers. That's exactly what behavioural finance theorists would predict. They've noticed that investors would rather accept smaller but certain gains than take their chances to make more money. On the flip side, investors are reluctant to admit defeat and sell stocks that are underwater in hopes of a rebound. As a result, investors tend to sell their winners too early and hang on to their losers for too long. You shouldn't be afraid to sell a loser because it will turn a paper loss into a real one. Hanging on to a dog in hopes of breaking even is a bad idea because you may be foregoing a better opportunity. The trick is knowing when it's time to cut bait. That's when it pays to have a clear reasons in mind for your purchase of any investment right from the get-go. If your expectations don't pan out, then it's time to sell. Again, this all links back to trading plan. That's what a trading plan will teach you to do. Get rid of your losers and let the winners run. Now, we're going to talk about volume spread analysis now and some of the key principles of trading with volume spread analysis, and then we'll go and take a look at that chart of SWN, and we'll actually show you, and we'll actually have a look at that. So first of all patterns seen in the past will be there at the right edge of the chart when they appeared, but they will come in different intensities. VSA is a discretionary methodology that still requires discipline and money management. VSA is much more effective when used with support and resistance. Now, I've put here Elliott wave, which I don't use. I use a different wave count, but support and resistance is I call them trigger numbers, are absolutely vital to identify. You will be amazed how often a market will come down to a support or it will go up to a resistance level on very high volume and react at that level. And there are, again, this seminar, we're not going to do a big course on support and resistance, but on the Trade Guider website, there are several very good courses that we've done using waves and support and resistance. You must use more than one time frame to see the bigger picture. Well, if you look at my trading plan, you'll see there is most definitely more than one time frame that I use, depending on what I'm trying to do. If I'm trying to scalp the market, which means I'm getting in and out quickly, trying to reduce my risk, then I'll be using a 1 minute, 3 minute, 5 minute chart. If I'm trying to get into the market for a long-term view, I'll be looking at an hourly, 4 hourly, daily, weekly chart, and even a monthly chart. And that would be used for stock trading, for buying and selling stocks. If you listen to news, have a very contrarian view of the contents when taking a position. You've heard the rumour, haven't you? You know, yeah. At the end of the day, it is true. When the news is good and the market's going up and everyone's buying, and you hear on the news the reporters saying, everyone's buying today, this particular instrument's very bullish. It only takes a week to see the whole thing collapse. And that's because as the price is marked up, as the buyers come in thinking, hey, I've got to get in on this trade. If I don't get in on this trade, I've missed the lower entry. I've got to get in now. The moment that happens, professionals will start to sell. We call that the end of a rising market. And it's exactly the opposite at the bottom. You get really negative news, really, really negative connotations happening. And guess what? You suddenly see the market rally. And I'll show you that with SWM. The chart never relies. Rely on your charting skills. You listening to this webinar will be able to read a chart, and we make it much easier for you by providing a charting platform and what we call indications showing the imbalances of supply and demand as they're appearing, and that's what moves price. I put here, become familiar with the personality of the instruments you trade. If, for instance, in the stock market, there are specialists, and stocks tend to move in a particular way. And when a news report comes out about earnings, you'll very often see the market marked up if the earnings are good. And immediately they're marked up, professionals sell into that, and the price drops. And the people who looked at the earnings report, which, I mean, I'll give you an example of this. If you go and look at Qantas, the Australian airline, and look at what happened in February of 2016, and you'll see there that the news was so bullish about that stock, so bullish. It had to go up. And we'll have a look at that stock in a minute. And the news was so good that a lot of investors began to buy into that particular stock. And what happened was, I think the news was the highest earnings they've had ever. But we had a signal in the Trade Guider software which said, I quote, end of a rising market. And what does that mean? It basically means the end. It means the market's going to fall. And as you'll see in Qantas, it dropped 20% in a week. It was a massive fall. And a lot of traders lost money on that, and investors, because they really believed that that stock was going to go higher. And why wouldn't you? Because the financials and the fundamentals all seemed to be in line. But I can assure you, fundamentals have very little to do with the movement of stock price. Okay, it's the activity of the smart money that's moving the price. Always use a stop loss. That's my advice. Don't have to do it if you don't want to, but I always recommend a stop loss. It's placed in the market because you're never going to be 100% right. Always pay extra attention to ultra high volume on the chart when it appears. And ultra high volume, we're going to show you 2 examples of that in the end of day software. I'll show you them in 2 stocks. Ask yourself, what are smart money doing here and why are they so active? Many VSA patterns, volume spread analysis patterns, require 3 bars for confirmations. So don't rush in. And I have produced in my second book sequences that appear that are now in the program, they're now in the software, which alert us to opportunities. Volume is the key to the truth. Ignore it at your peril. 5% who win. There are various percentages put out there about who wins and loses in the markets, but I don't get too stuck on whether it's 5% or 8% or 3%. Doesn't matter. This is what I've learned about winning traders. This is what they have. Number 1, belief. They believe in their strategy. They believe in themselves, and more importantly, they believe in the system they're using. Belief, as any winning trader will tell you, is absolutely vital to your success. Visualization, seeing the winners, cutting the losers. Very, very important that once you've made a winning trade, focusing on what you did and how you felt as that trade was making money. Most importantly as well, if you have a losing trade and it's gone against you, analyze why it's gone against you, learn from it, and then forget about it. Okay? I know it's difficult for many people. They say, well, I've just lost £5,000 or $10,000 or whatever the amount of money is. But if you keep dwelling on losses, you'll get more of them. So try to focus on winning trades. Think as an individual. Be contrarian. Don't believe everything you see in the media. Don't believe everything you see on TV about the market. Because most of it, okay, not that they're lying to you, by the way, it's just they don't understand. Develop your chart reading skills. Okay, all the traders that I have met, many of them that are successful, use charts as their guide. They're highly disciplined. Many of them are very spiritual people, okay, and really want to help other people. They're open-minded and very often willing to help other people succeed. I believe the more you give, the more you get back, and that's very true in this world that we live in. So that's one of the reasons I do what I do, spend my time trying to teach people and hopefully getting people to successful levels. And, we are seeing that. Expect to receive and do so graciously. Any winning trader I've met expects to make money in the market. And when that happens to them and they're making money and increasing their account, they're incredibly gracious. They have excellent risk management strategies. So important. So important, right? Managing your capital and learning how to do that. If you're not sure how to do that, we have a live trading room, which I'll talk about in a minute. And next week, we've got a new alert service that we're launching on Monday, a 24-hour alert service. Okay, so no going to sleep on the job. And I'm delighted to say that Tom Williams will be participating in that as well. We'll talk about that in a minute. Always able to stay in the game. What does that mean? It means they haven't blown their account up. Because if they lose 3 trades in a row and lose 6% of an account, they've still got 94% of the account to trade. A lot of people out there I've heard of many stories of people that have blown up a whole account in one trade. That doesn't make any sense. Take consistent and small profits. You don't have to try and make the first trade the $1 million trade or even the £100 trade. No one ever went bust making small profits consistently. Don't be greedy with the market, as per the beginning, the Alibaba story. And finally, always happy and content. That's how you have to be. Be happy and enjoy your trading. Don't think it's a struggle. Enjoy it. And if you enjoy what you do, as you can probably tell, I love what I do and I enjoy what I do, then you'll get a lot of benefit from it. So a few things just to remember before we look at the charts. Yeah, Samuel, you've got a little point there. He says it seems a bit of a conflict saying take small profits or letting your winners run. Very good point. Let me try and clarify, because I'm talking about general advice. Let me talk about how I do that, okay? I have different strategies for different markets, all right? Now, I've got one large account where I use trading, what I call a swing trading account, where I will just let trades run with what we call a trailing stop. But in many of my public webinars, I'm trading a small account. I can't take the risk. If I've got $200 in a profitable trade on a $2,000 account, that's 10%. I don't need to let that run because there'll be another opportunity. So I take the trade off quickly. But I do have two different strategies, because the trouble is with, and I know what some of you are thinking, well, how do I know whether to let my trade run? How you do it is use what we call a trailing stop. Okay, and that's a strategy that we'll talk about in the live trading room. And what you're doing there is, the first rule is you're reducing your risk on the trade by moving the stop to break even wherever you are. So let's say, like the Japanese yen today moved up very rapidly. There was a stop, went to break even, and then once the market began to increase and expand and move higher, there was what we call a chandelier stop. And again, that's a strategy that we teach, where you're locking in with a stop loss profits. Now, the benefit of that is, once you're past break even and into profit, if the market really runs, and sometimes it does, you are letting your winner run. If the market goes into congestion and whipsaws, you're being stopped out for a small profit. Now, the idea of it, or the principle behind letting winners run, is you want the market not to whipsaw. But of course, there are many occasions when it does. So you have to be realistic with what the market's going to give you. So I have a view that with a big account, I can use a wider stop because I've got a bigger account, and therefore I can let that winning trade run longer. With a small account, you have to take little and often, the Alibaba principle. So let me just read this to you as well. Yeah, Mr. Nay, that's right, Joseph, hello. He says, Mr. Nay would say a steady dime is better than a seldom dollar. Yeah, that's Richard Nay, exactly right. So some points to remember. Each of us are unique. We have different account sizes, loss tolerance levels, experience levels, different ways of viewing things. Two people can look at the same mountain from the same place and see entirely different perspectives. And we all must accept we have different levels of self-discipline. VSA principles apply to all markets where there is volume available and in all time frames. KISS. Keep it simple, stupid. Nothing is rocket science. VSA is very logical and is based on principles that have been around for decades. Take a holistic approach to your chart analysis. What do I mean by that? Don't just look at one time frame. I tend to start my analysis each day by looking at the daily and weekly charts with 200 bars of information on each chart. That gives me a really big picture of market direction. I can see unusual volume areas in the past, and if price action reapproaches those areas, then something's going to happen. So I always start with the big picture. Definition of holistic, emphasizing the importance of the whole and the interdependence of its parts. Think like a predator and not the prey. Always believe you can make money and have the right to make money. Do not trade if you're in a really bad mood. That's a pretty obvious one. Visualize winning trades and study your previous winners very, very closely. Start with a top-down approach, looking for areas of accumulation and distribution in the larger time frame. Always trade in harmony with the trend, unless you're very experienced at counter-trend trading. Put the odds in your favor. Watch the parent index if you're looking at stocks. If the parent index is falling and a stock is rising, you would be pushing your lock to go long against the parent index. Select stocks to buy that are outperforming the parent when the parent is moving up. Let me give you an example of that, right? So if we looked at the S&P 500 and we looked at that stock SWN, it would have been underperforming the index for a year. But suddenly professional money stepped in and purchased that stock, and they bought it heavily on bad news. And then that stock began to outperform the index. If you're going to short the market or select stocks to sell, which you can do, they have to be underperforming the parent index and seem to refuse to go up with the parent. These are not being supported by professionals, or maybe still undergoing what we call distribution, so they're not ready. Identify turning points using support and resistance. There it is again, noting any unusual volume activity. Always look at the background of a chart, which we're going to do in a second. So we're going to get to some charts. It holds vital clues to the right edge. Remember, anything seen, especially with VSA, that's there in hindsight will have been there when it appeared at the right edge of the chart. Any questions from anyone? Let's just see if there's any questions. Can't see any coming in, and I hope you've all enjoyed it. So on behalf of the whole team, God bless, take care. Thank you very much for being with us, and we'll look out for some trade alerts coming this week. Thanks a lot. Cheers, everyone. Bye-bye.